Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame where we are looking for a sideways ranging structure in a wave 4, after which we look for a wave 5 towards the upside to new all-time highs. The retracement targets for a wave 4 have been respected. Over here in blue, we have 93.5k to 86.6k as an important area of support, which has been touched. And also from a Fibonacci perspective, we have the 0.5 to the 0.236 taken from the low to the high of your wave 3, 92k to 83.3k, which is also touched as price over here retraced to the 0.236. The invalidation would be 79.4k. Now, even though the retracement, the price retracement of this wave 4 is sufficient enough for a wave 4, from a time perspective, you preferably have a bigger sideways structure. And that's because of the vertical line here on the chart. That is a fib time taken from the start to the end of 2 to the end of 3, comparing your wave 2 with your wave 4. Now, it is most common in Elliott waves that a wave 4 is longer in time compared to your wave 2, which means wave 4, this range here, the corrective structure, would finish on top of or after this vertical line on the chart. And at the moment, this low over here is made before this vertical line on the chart, meaning that if this is the end of your wave 4 is shorter in time compared to your wave 2. So the price retracement target is reached. It's just that from a time perspective, you would expect a longer sideways range. And keeping this in mind, it is important to be aware on a 1 hour time frame of potentially longer sideways ranging structures. And one of these scenarios is here on my chart, which is a zigzag, a 5-wave structure in A, 3-wave B, and a 5-wave move down in C, moving below the low of your wave A at 90.6k, hitting some of the support areas we have to the downside between 89.4 and 90k, as well as 86.9k to 87.4k. Now, in this scenario, we did reach for wave B the common target area, which is the 786 golden pocket, 97.9k to 96.3k, taken from the high to the low of your wave A. However, from a time perspective, time is very important in Elliott waves. From a time perspective, you can see that this wave B is incredibly short in time compared to your wave A, which is visually represented by the vertical line on the chart, the 0.382 taken from the start to the end of your wave A. It is by far most common for a wave B to end after the 0.382, not before the 0.382. So therefore, the fact that currently we then have a potential 3-wave here finishing at this high lowers the probabilities for this scenario. It would be better for a zigzag 5, 3, 5 to the downside to continue this range in a wave B in either a WXY sideways structure or even a triangle A, B, C, D, and then E, and then get your C to the downside so that you finish wave B at a later stage after the 0.382. So in other words, you would actually like to see a continuation of the range to increase the probabilities for this scenario. Now, it is way too early to really start talking about a sideways WXY or a triangle, because for a triangle you really want a wave D to be in before you really start considering triangles, but it is at least something that we are aware of, and the continuation of the range should be part of our Elliott wave vocabulary in this scenario. Now, the second scenario I have on my chart it's almost like a psychology scenario, and I'm actually a fan of this, but that is a personal preference. It's not Elliott wave related. It's just that I would love to see something like this in the bull market at some point because of the psychology of this scenario. So in this case, we have an expanding flat, and a wave 4 on the daily can definitely have an expanding flat. It's actually quite common. So here we then have a 3-wave A, you look for a 3-wave B and a 5-wave C. Now this wave A then has to be counted as some sort of a zigzag family structure, so a 5, a 3, a 5, or some sort of a WXY. It's not the clearest count, right? Counting this as a 3-waver versus counting this as a 5-wave structure, it looks a little bit better, but it's still good to be aware of this scenario here, where in a wave B, you then look for a double zigzag. So we then have an A, B, C, and a W. You look for a 3-wave corrective structure in a wave X, and then eventually a wave Y to the upside. Common target for your B is 102 to 103.4K. Now this is the area from a psychology point of view after you break the high where people start buying again and YOLO, FOMO, we reach 100K, the moon is the next target and blah, 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 blah. But then eventually, it would be so amazing to see this during the bull market at some point, especially at 100K, but we'll see. Fake everyone out, grab the FOMO liquidity, wreck everyone and liquidate everyone, take out the low, right? Everyone's scared. Oh, was this the high? We hit 100K, and then you continue to the upside, right? So you grab the liquidity at the high, grab the liquidity at the low, and then you continue. Now it's a little bit early still to really consider this as an awesome scenario, but just because of how short the zigzag is in the previous scenario over here, ABC, right? We have to consider other structures as well. Of course, in a zigzag ABC, you would look for 5, a longer sideways range here, and then a move down in a wave C, right? We will be able to identify the probabilities if we get a bigger sideways range. But because of the short B here, we have to consider a scenario where we get a bigger B in time without necessarily moving sideways only, but also moving up to take out the high, which is what you see here. So in this case, then we have zigzag W, 3-wave X, zigzag in a wave Y. Now you don't want wave X to move down to the 0.7. So the moment we hit 92.6K, the probabilities for this whole scenario go down. Okay. Now what you do like to see is price at least touching the 0.382. The common target for a wave X starts at the 0.382, but as you can see, we didn't hit it yet, right? So the 0.382 to the golden pocket is perfectly fine. You just don't want to touch the 0.7, right? So that's an important level on the chart. And then your wave C has to be an impulse, 1, 2, 3, 4, 5. Generally in an expanding flat, it's very quick, very scary, so to speak, right? If you don't know what's going on. And then you look for support and price to reverse and continue to the upside. Now, finally, the most bullish scenario. And this is why I covered the daily at the beginning of this video. Because in the bullish scenario, you would need to count this as a finished 3-wave structure. And then this move to the upside has to be counted as an impulse. Now in this case, you then need a 1, 2, 1, 2, 1, 2, 3, and then a couple of 4, 5s here to the upside. And when I earlier this morning compared some of these wave 4s here with some of these wave 2s, I don't know, I don't really get a lot of confidence for this move to the upside being a wave 1. But it is a scenario we have in mind. Invalidation is the low. And another reason why this scenario is, from an Elliott wave probability standpoint, not the highest probability, is because of the daily time frame. Remember, this low was made before the vertical line on the chart on the daily, which is the 1-to-1. Preferably wave 4 is longer than 2, so therefore, from a daily perspective, you would prefer bigger sideways structure. And then based on the local price section, you get more specific. Now, this is a scenario where your 3-wave structure here is finished and you look for continuation up. So 1, 2, and then boom, continue to the upside. Not a wave B flat, go down and then up. You just continue up. It's just that from a time perspective, it makes less sense on the daily, and locally, you still actually want price to move down first, because the common target area for 2 is 05786, 94K, 92K here, and the 382 is also here a minimum target for a wave 2. So you actually preferably first see a move to the downside. Finally, I want to show you this here. Maybe a bit more educational per se, but the reason why I do not really like to consider this as an unfinished impulse, 1, 2, 3, 4, 5, is because of the base channel. So we have 1, 2, 3, 4, 5, right? Base channel taken from the start of 1 to the end of 2 to the end of 1. You want wave 3 to escape the base channel. And then you want wave 4 to then come back, but then move up. You don't actually want to see the lower trend line hit of a base channel. And we not only hit it twice, we actually broke it now, right? So it lowers the probabilities that what's happening here is a wave 4. And therefore, I prefer to look at this move to the upside as either a 3-wave or it has to be a finished 5-wave structure, right? So that is where the scenarios come from on the 1-hour time frame. If we then finally look at the CVD divergences, then first of all, the bullish CVDs here played out, price moved to the upside. You can see we have a bullish CVD here. However, mind you that this CVD divergence is with a pivot on the left and a pivot on the right of the most recent high. And you can also see the bearish CVD. Now, CVDs on the right side of the recent high or low are most important because that's the most recent price action, and CVD shows you what is happening in the market right now, right? Absorption of market longs or market shorts. So therefore, this bearish CVD that we had here was actually more important, right? Now, this one already played out because we took out this low here. If I go to the 5-minute though, let's see if it shows. It doesn't, the line doesn't show, but what you, now it does, perfect. What you can see here is that we have another bearish CVD, right? Lower high on price, higher high on the CVD, as you can see. The target for this CVD is taking out this low here. And then of course you get very close to the low over here of this range. But at the same time, that's actually something that we would be looking for. As in a zigzag, you look for a wave C to the downside. In a flat with a WXY, you want to hit the 382, which is a minimum target, and in an impulse, preferably you actually also hit the 382, right? Now, if we then finally look at the probabilities of the different scenarios, then on the daily time frame, right, probabilities are higher for the bulls. We are still looking for price to move to the upside, waiting for a wave 4 to form, and then continuation with on the number 2 spot, basically any big bearish scenario. So generally, preferably creating a bigger wave 4 in time. However, the minimum targets are reached, right? So that is why we can at least consider an impulse to the upside. Now, on the 1-hour time frame, the probabilities are higher to continue the range versus bullish continuation. In other words, a zigzag in a 5, preferably a longer B though, and then a 5 has a higher probability than a wave 1, 2, 3, 4, 5, and the moon is the target. And also a flat A, W, X, Y, B, and C will have higher probabilities than bullish continuation at the moment. Wave B in a zigzag, however, is very short, as explained. This makes me consider scenarios where we continue the range, as explained, / move up, right to flat, right? Like the flat. Hence a flat is an option, also common for wave 4s. The local move down, which is this move over here, right? The local move down will give more info about another move up, yes or no. Because if this is a 3-wave corrective structure, we look for the high. If this starts to be impulsive, we can look for lower, but we will need a bit more information here locally. But as B in a zigzag is so short, probabilities would be higher to continue going sideways, as explained, / look for price to take out this high, right? Possibility first to drop in the fibs below, as explained, right? So if we are looking for a wave B, we preferably anyway eventually go down. In a flat, minimum target would be 382, so preferably we actually still move down because we didn't hit the 382. And in an impulse, you also preferably still move down because we didn't hit the 382, which generally is a minimum retracement target. And then of course, we have to look for signs of strength here to then continue looking for a bigger sideways structure and just trade the range until it breaks, pretty much, right? No financial advice, we're on YouTube. Or we look for a bigger move up and then potentially the flat, alternatively the impulse. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.